Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So something a little bit different for you guys today. I'm actually going to be winding the clock back 5.5 years to a post I made on an Australian real estate investing forum entitled Hypothetical Share Purchases. If you can't tell already by the title, the whole idea of this post was to hypothetically purchase some shares just for a little bit of a thought experiment. Let's see what happens. Well, we're 5.5 years into the future, so let's see what happened to these hypothetical share purchases. Hey guys, if you live in the US and you'd like to help out the channel and get up to 4 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 2 free stocks between $2.50 and $250 each just for opening an account. And if you deposit $100, you'll get a further 2 free stocks valued between $8 and $1,600 each. That is an obnoxiously good return on your investment. I mean, really, deposit $100 and you'll end up with, at minimum, $21 worth of stocks, a 21% ROI on your money. And if you're in Australia, the UK, or New Zealand, you can get a free stock with stake also using the link in the description. Let's get back to it. All right, so here we are. This is the post. You guys can jump on Google if you want to find it. Property chat, hypothetical share purchases, posted by Stephen Ryan, 18th of June, 2015. I'll read. I thought this would be a fun chance to make some hypothetical purchases. No doubt this forum will be around for a long time, so it'll be interesting to check back. Fancy that, 5.5 years later, we are now checking back. So I said state the amount, company, minimum hold period. Then I detailed what I would do using a total capital starting amount of $1.6 million. $500,000 into Tesla, $100,000 into Solar City, which has been since acquired by Tesla, so we'll get into that later. $500,000 into Google, $500,000 spread across the top 20 biotech, artificial intelligence, robotic companies at present, by the way. Sounds a lot like the ARK funds, doesn't it? So we'll detail that too. Then a big investment in SpaceX, $5 million, as soon as I had the opportunity. I'd already contacted SpaceX around this point in time too, and previously just asking if I could ever get into a round, and obviously I had nowhere near enough money, but hey, I thought, you know what, it's always worth asking, you never know. But unfortunately that didn't happen. And also $1 million in Craig Ventor's first public company. No company of his has gone public, so there's probably no point to even bother with that one. We can just leave this one out. If you want to add it back in at the end, then that's fine, like whatever. But you know, I can't be bothered trying to figure out what's a good substitute for that. So I said, I believe it's a good spread with enormous potential. That sounds a bit weird. I will be putting some of my money where my mouth is. I don't quite have a spare $1.6 million to get going on those immediate purchases though, and then put some current prices. So now let's move over to the spreadsheet and look what I bought and what's happened since. Okay, so here we are. I'm just going to fill you guys in on exactly what happened. So these are all of the purchases of shares that I mentioned in that post. I'll just reveal all the details on those for you. Now, I'm just going to also explain something here too. So what I've done, because I had a post there sort of suggesting that I was going to distribute $500,000 evenly among artificial intelligence, biotech, blah, blah, blah companies, the whole idea there was to do basically what the ARK funds have done. So I've included purchases of ARK W and ARK K at the date that I made that post on the forum. However, that didn't quite cover everything. I was also trying to get at genomics and stuff. That's why I mentioned Craig Ventor's first public company. We'll ignore that, but I decided I'd allocate some of that capital to some of the ARK funds. However, the ARK Genomics Fund wasn't actually launched until 2019. Same for the ARK-Q, so that means that some of those returns probably aren't actually going to be truly representative because there wasn't something to invest in then at the time. You know, if I'd held these for longer and they'd continue to grow, obviously. But this is good enough. It's just an example of the thinking, where my thinking sort of has changed or if it stayed the same. Some of the reasoning and what happened to these results. So the first one, Tesla, you guys will all kind of probably know how this one has gone. So we'll reveal all the info on this. Bought Tesla 5.5 years ago, hypothetically, at just under $50 a share, split adjusted. The market price today, $663. So it's a 1,300% increase in value, decent. You know, turned $500,000 into $6.6 million, hypothetically. Yeah, that worked out okay. Solar City, just to keep things simple, rather than accounting for the growth that it experienced and the premium that the shares were purchased for by Tesla when it was acquired, we're just going to assume that I instead actually, the Solar City just was an initial purchase of Tesla stock, just to keep things simple again. This is just a thought exercise, just general principles. So that one, pretty decent gain there as well, over 1,000%, 5.5 years. Google was the next one, a very big investment there, $500,000, the same amount that I thought was worthwhile putting into Tesla. The result on that, the return on that, a mere 330%, turning 500,000 hypothetically into over 1.6 million. Now, I'll just do both of these ARK funds for you together at once. These are the ARK funds that actually existed at the time that I wanted to spread that money around the top 20 sort of companies in those kind of areas. So let's see how they went. 618% growth on ARK W, 588% on ARK K, so actually very similar. Now, because these ARK funds haven't existed the entire time, the returns are going to be a little bit different, but that's okay. We'll still sort of, it'll be a good enough example. ARK G up nearly 300% in just over a year, and ARK Q about 200%. Final piece of the puzzle, SpaceX. I've included a bit of a spoiler there. The valuation at the time of this post was 12 billion. It's now 92 billion. How did we turn out? Wow. So starting with 6.6 million, if this is all included, everything, all those hypothetical share purchases were made, 750 odd % return, turning $6.6 million into effectively $50 million, a $43 million profit, half a decade, give or take, maybe a little bit more. So it's not a huge span of time, but I mean, this is the earliest sort of content that I have that I can confirm. Here's where my thinking was back then. It's good to look back and think, how would I change things? And I can see a huge error here. Soon after making this post, I realized the opportunity in Amazon was being greatly overlooked as well. And also the weighting of these two, if I had really thought more deeply about Google, I probably would have realized that the likelihood of them to continue the rate of growth that I was hoping to see from some of these projects that are on the go was low. I know they still have an enormously valuable asset of data, which is I don't really think that the market's even accounting for that in Google's valuation, but I definitely over allocated capital to Google considering where their potential was and how much they'd already grown to that point. I'm not complaining about a 330 odd % hypothetical return, but I definitely wouldn't have invested the same way if I knew what I know today, not about how these companies would go, but just in general and about investing. But keep in mind, when I made this post, I was just about to make my final purchase of real estate. I'd kind of been learning as much as I could about these companies and sort of seeing the opportunity there, but I still had my real estate investor hat on as well. So I wasn't like all in focused on learning about stocks. But anyway, thought this was fun to go through the returns. And now for some fun. What are your hypothetical share purchases? Let me know in the comments below. If you had $10 million to invest today, how would you invest that? It could be a combination of private or public companies. We'll check back in about 5 years or so. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget, if you live in the US and you'd like to help out the channel and get up to 4 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 2 free stocks between $2.50 and $250 each just for opening an account. And if you deposit $100, you'll get a further 2 free stocks valued between $8 and $1,600 each. And if you're in Australia, the UK or New Zealand, you can get a free stock with stake also using the link in the description. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. PS, if you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.